There's a story on the Bloomberg today sort of emphasising not just that the hawks have been out recently, but also, of course, that when we heard from the IMF meetings, even Italy's Ignazio Visco, a long-time supporter of stimulus, said he doesn't want any more rate cuts. Do you think the market is in any way overpricing what we get from the ECB from here?
I think in terms of pricing in, they're not pricing in an awful lot. The ECB has basically done as much, I think, as it can do.
Yeah.
The depo rate's now at negative 0.5%, and it's having a very, very deleterious impact on the banking system. That's kind of clear. What's interesting is that the banks haven't yet passed on those rate cuts to customers in any real or meaningful sense. If they do, it's not just the economics, but more the politics that gets interesting, because then normal depositors are seeing their deposits whittle away because of because of the ECB's policy, and then you'll see the real backlash against the ECB. So I think that they're more or less close to the limits of their policy. As Draghi has said consistently, he needs the finance ministers to step up and to basically engage in more fiscal stimulus. That's definitely been required for quite some time. Many of the European countries have the space to do so, particularly Germany. But saying it and doing it are two entirely different things, I'm afraid.
Absolutely, the gap is immense. Can you hear me, Peter? Can you hear me?
Yeah.
Can you hear me clearly?
Yes.
Good. Listen.
Yes, I can.
I want to put a proposition to you. I've said that to many people, but here you go. We're going to talk about the Fed in a moment. In 1998, the Fed cut 3 times. We'll talk about that in a moment. They cut 3 times, and then they said to the market, we've done enough. They sent a very clear message to the market. The rhetoric coming from Austria, Netherlands, and Italy. Are we in the same moment from the ECB as we were from the Fed in 1998? Halas, enough, we're done.
Yeah, for me, I think they have. I mean, look, you're getting to a stage now, certainly on the deposit rate policy, where it's having more sort of malign impacts than benign impacts. And I think really from here, further deposit rate cuts aren't really going to do anything right at this stage. They're not going to have any kind of stimulative effect whatsoever on the European economy. So from my perspective, yes, I fully agree with them. But if you look at it, the focus has also shifted to restarting the QE program and then basically trying to encourage governments to borrow more. And the real trick for the ECB now is just to keep rates at such low levels that finance ministers say, look, we can borrow for a very, very long time. Let's get ahead and do it.
So it sounds from what you're saying that you think we've actually hit, or we're very, very close to that reversal rate. But if fiscal policy doesn't pick up the baton, then what's left for the ECB to do? I understand you say they've hit their limits, but what should markets be preparing for?
You can't prepare for anything really, because there's nothing they can feasibly do. They could increase their QE volumes, but again, what impact is that going to have when German bonds are already trading at negative 40 basis points? Very little, frankly. So I think really that it's quite clear that they're at their limits. They've done as much as they can do.